Greetings, friends. My name is Raymond Yeung. I'm a Hong Kong tax consultant. Now, I would like to talk about Hong Kong tax investigation. Tax investigation is terrible. If you are being investigated by IRD, you will be in big troubles, in very serious troubles. Why are you investigated? Because you filed a tax return which is, in opinion of the IRD officer, not correct. That means you should have understated your income, or maybe overstated your expenses, or you may have submitted a false claim for exemptions, etc. And it is very easy to know that you are being investigated. Just look at the file number. If there is a bracket 10, a bracket 35, a bracket 37 beside the file number, that means you may be investigated. 10 means 10th floor. You know, investigation officers located on these 3 floors, 10 floors, and mostly few audit cases. 35, 35th floor, tax investigation cases. 37, that may be a criminal prosecution case. So you can look at the file number. You can see that you may be investigated. Usually they will phone you or give you letters, telling you that the letters are from Unit 4. That means the investigation unit. LD officers, they have legal power to raise back year assessments, additional assessments, estimated assessments, and they can take penalty action, which may include penalty, money penalty, or prosecution. General prosecution or criminal prosecution. So beware. You must file a correct tax return. All the officers have a lot of powers under the tax law. They can collect information from you. If you don't supply information, they will say that your records you have not kept sufficient business records. That is a very serious problem, and that may by itself lead to a penalty. And they can have the right to ask your boss, ask your customers, ask your bank, ask anyone they think in possession of the information. You ask them to supply information to IRD so that they can make an assessment. Assessment may be usually an estimated one. If your accounts, you have kept sufficient business records, your accounts reliable, in that case they may use the account to as a base, as a basis for the assessment. Make adjustments. For example, disallow certain expenses which are not incurred in the production of profit, maybe a public nature, a domestic nature, or irrelevant to the running of business. For example, you have directors, who may be your relative, and the LD may suspect that they have no role to play in earning the money. They have no contribution to the the running of the operation of the business, so that all the expenses, including the salaries and director fee, will not be tax deductible, and then they add back such expenses, and then you will be regarded as filing an incorrect tax return. Now, sometimes they ask you to provide a lot of information concerning management fee, concerning commission expenditure, and they may suspect that such expenditure may not be wholly tax deductible because the service provided in connection of such expenses is not worth for such thing. They call it value for money. They may say that the IRD will restrict the amount of deduction, so that then in that case your profit will be adjusted upward. So that the taxable profits. That means you have filed an incorrect tax return. In some cases they think that you have omitted certain incomes because you have secret bank account to receive money from your trading. In that case, scrutinize all your bank accounts, including public bank accounts, bank account of your spouse, your children, your father, mother, and then they check whether there are bank deposits, bank transfer, deposits in such bank accounts, and then they find deposits. Then you ask them, they will ask you to explain them. If you can't explain them the source, then they will say that it should be generated from your business, and so all such deposits will be regarded as your income and add to the profits of your company. Maybe you treat it as a separate business. You carry on a sole proprietorship business in your own name, to receive such money, and that is also an offense because you have not reported such income for tax purpose. You fail to notify the IRD of chargeability of such business. You run a sole proprietorship business under your own name, and you should report tax, notify chargeability, and you fail to do that. That is an offense. You may be liable to penalty. In rare case, the IRD may use an asset betterment method, AB, as they call it, asset betterment statement, to estimate your income, because your increase in your net assets may be the amount of profits that you have omitted. So but nowadays, because asset betterment takes a lot of time, they usually as a basis for an estimation, but not as the basis for settlement, basis for agreement. But they may check the assets, liabilities of your business, of yourself, and then to make an estimate of your. And also, of course, they ask you for information about your daily life and how you spend money, and they can estimate for the cash, receipts from your business, and they may say that because such money you have expended before they deposited into the bank account. They will say you have omitted a lot of cash which has been expended as your public expenditure. So there's the method used by IRD officer to make an assessment on your profits. Tax investigation may last for months or maybe last for years. If luckily, if the case is simple and you agree to most of the estimation, then the case may be finalized within 3 months. If you do not agree ILD proposal. There are problems in in getting the information, and the duration of the investigation may be quite long, maybe over 3 years. So that will be very painful for a taxpayer, because they are under great pressure, to pay tax, because ILD may raise estimate assessment, because of the time limit, 6 years. They will issue estimate assessment from time to time every year, a big amount you need to pay, and that will be a big agony, I say that to you. So if you want to know more about Hong Kong tax investigation, please come to my website. You're welcome. Goodbye. Bye-bye.